Hello and welcome to CMC Markets Weekly Trading Outlook for January the 11th, 2016. My name is Colin Szynski, Chief Market Strategist. This week I've got three big questions on my mind. How low can oil go? Is the gold breakout for real? And what is the market expecting for earnings season, which kicks off this week? And these three questions could have quite a bit of influence on trading, as well as I guess my fourth question really is what's up with Chinese markets heading into the new week? We're coming off what's been an extremely volatile start to the year for world markets. The Chinese markets had been leading the way lower, with 2 days where traders pounded the markets down to hit their circuit breakers. And the second day to me seemed to be more like people were just gunning for the circuit breaker more than anything else, that the market closed within an hour of it opening. So the removal of the circuit breakers initially had some volatility, but then markets seem to have stabilized since then. But even then, we've had an up and down day here on Friday the 8th. We had some rallies in China, and we had a decline. Then we had rallies on U.S. non-farm payrolls, and then we've seen markets come back off again. So it's been a fairly choppy day, really, for world markets. And as I'm recording here, we have U.S. markets pretty much flat. We have European markets actually finally back into the green. They'd been in the red for part of the day. It's been really choppy. I guess a lot of people don't seem to quite know what's going on out there. My feeling about China, to start with, is that a lot of this is market related. That we had this huge spike last year. And we're still kind of unwinding it. This big rally back here in February and April, and yes, we've ended up below where we started. But look, we've had one leg down, two leg downs, and now we've got another retest going on here, and we're still kind of sorting out the imbalances that were created back here. So this is in a lot of ways more related to the market and trading and rules and regulations and other things, than less to do with the economy. So that's important. But a lot of people have been trying to extrapolate, what does this mean for the economy? Well, back here it didn't do a heck of a lot, and it seems to me actually the bigger impact on the Chinese economy last year was from the rising yuan, which got pulled up higher against everything else, along with the US dollar, because it was pegged. People are now worried about China taking off its peg, but to me, it's less about a devaluation of the currency and more of a trying to cut back pull back on the increase in valuation that it had to something that's a little bit more realistic based on its overall economy and global trading patterns. So we'll see what comes, but this is still likely to be choppy for a while. It's still likely to take some time to unwind. And the first thing we'll see this week is China markets could be active, because we have on the weekend here, even before markets reopen, we have China inflation numbers coming out. We also during the week have the China trade balance, which is Tuesday night in North America, Wednesday morning local time. Other than that, it's a fairly quiet week for news. The other big things we have on Thursday the 14th, we have the Bank of England meeting. No changes expected there. And Friday wraps up with a busy day for data out of the U.S. Retail sales, empire manufacturing, industrial production, consumer sentiment. Really, though, in terms of news, the big focus is going to be on earnings reports, which I'll get to a little bit later in this video. First, I'd like to circle back to the question we kicked off with, which is, how low can oil go? We're looking here at the West Texas chart, and it's still been in a pretty solid downtrend for the last few months. In fact, let's just take this out here to a couple of years. So we had the big plunge at the end of 2014, bit of a rebound, sell-off, tried to rebound again. Both 2015 rebounds failed at lower highs, and now we're seeing pretty steady distribution. Guess what? We're breaking down again. Now, when I come over here and look at the RSI, yes, we're oversold. Yes, there's a positive divergence forming. So we could get a trading bounce here, but each time I look at this, the upside potential of a trading bounce seems fairly limited. Back here, oil went from 42 to 62, and even here it went from 37.50 to 60, or sorry, to 50. And but this time around, I mean, what could we get? Maybe 38, maybe 40. I mean, it's pretty tough here to see what kind of upside we've got. And the reason for that is that the oil market is still a real mess. The one thing that's come out of the increased tensions between Saudi Arabia and Iran is it's likely that the oil price could go significantly lower this year. Even if we do get a trading bounce in the short term, over the course of this year, we could see oil quite a bit lower. Why? Even if they're not shooting at each other, and that the rising tensions between the two countries, generally speaking, means they're unlikely to cooperate at OPEC. They're unlikely to cooperate with each other to limit supply. And in fact, the incentive for each of them is to ramp up production, drive the price down, and try and bankrupt their adversary. So when you look at that, it's hard to see how high oil could go from here. And in fact, the bigger issue is how low could it go. So let's take a little longer term chart here. And we'll see for Texas, we're kind of hanging around these. We've broken these lows here in and around 35, the 2008 lows, and we're continuing to work our way lower. Now, this next support zone here finds itself in between. That's 25.75. $30 is here, so we could retest 30. We could retest 25, and it's even possible that at some point you could get back. This low here, the 01 lows were in this 1750 to 20 range. Could we see it back here? Well, maybe. But if we did, we'd probably see it for a very short period of time, and then it would rebound. But realistically, could it retest 30? Certainly. Could it retest 25 and hang around there? Maybe. We don't know what the level of pain is for the producers before they start getting serious about cutting back production. And even then, do they want to? When you're looking at Saudi Arabia, that's got a political war going on with Iran, that has a supply war underway with Russia and the United States, and really, I mean, there's at this point in time, unless they've and there's talk among them of totally rebalancing their whole economy and budget and making major sweeping changes that way. So it looks as though to me that people are setting up for a long-term lower price oil environment, and so how low could it go? Well, it could still go quite a bit lower from here. What's the final number? It's hard to say, and I'll be honest, I'd be pulling one out of the air. But whether it's 30 or whether it's 25 or whether it's 20 or whether it's even this around 17, this low here, whatever it ends up being, the basic point really though is that upside is likely limited, and crude oil could stay in the lower trading range for a while. But whether that becomes 40 to 60 or 30 to 50 or 20 to 40, it remains to be seen. I'll just show the chart briefly here for Brent crude as well before I move on here. And it's the same sort of thing. Looking at the monthly chart here, Brent has now taken out its 2008 lows. It's taken out 35. This here is around 30, and these lows back here are closer to 2250. So even Brent, we still see some room. Yes, it's oversold. Yes, we could bounce, but bounce to what? Maybe bounce to 40, even 50. I think might be pushing it. Maybe you might get lucky, get 44 or 45. But still, overall, this trend is still looking like it's pointing pretty seriously downward at this point in time. So, moving on to the next question, which is gold, and can the gold breakout last? Gold has staged a major breakout since the beginning of the year, and is actually looking pretty good. I'm still of the mind that U.S. dollar has peaked, even with the strong non-farm payrolls numbers. U.S. dollar still can't get through 100 on the U.S. dollar index. My thinking is that basically that the U.S. dollar is peaking here, and that as 2016 unfolds, that we could see a recovery in oil, and we're starting to see that. Here's the long-term monthly chart. Look at this big parabolic rally here, and then it's been working its way lower. But guess what? Where are we now? Back in and around here at this 1086 level. In fact, it was a 50% retracement of the whole uptrend. For the whole 10-year uptrend, 50% retracement level, we dipped below it. Now we're back above it. So that's encouraging. And even here, the downward momentum hasn't been getting any worse. It's just been kind of stabilizing. Now I'm going to move back and look at a daily chart. In 1 second here. There we go. So once we change this to the daily chart, we'll see that we're starting to break out of a base here really nicely. We had a down climb. Remember, this is that 1086, that big retracement underneath here, double bottom in below 1050, bear traps, not able to hold below it. Look at this, oversold a couple of months ago, and gold has been trending higher. Recently, the RSI broke above 50, signaling the upturn. The breakout here confirms the upturn. Not only do we have this double bottom, also could be seen as a head, as you could see this as a saucer bottom. You could see this as a double bottom. You could see this as a head and shoulders bottom. There's a lot of different ways to look at this, but basically, it appears to me as though we've got a pretty nice base on in gold and a breakout underway. Look at this here. We broke through 1086, upturn signal, breaking 1100, the round number, get to 1110, come back. We've had a retest, and now we're starting to go again. So prospects are definitely looking up for gold. Fundamentally, what could move gold? Well, increased political tension, certainly defensive flows of capital, and the important thing is this on the defensive flows. Not only are we seeing it in the gold, we're seeing it into the yen. And one of the things that in the last year we were seeing it all going into the U.S. dollar, but the U.S. dollar has gotten so expensive now that I think people are starting to look for cheaper alternatives when they go defensive. So we've got the yen picking up, we've got gold picking up, and on top of that, the even money supply, Japanese QE continues, Eurozone QE continues, and even the U.S. They may raise rates, but even the most recent comments today from San Francisco Fed President Williams, looking at one every other meeting, half the pace of last cycle, and the potential for rate increases this year. And there's certainly lots of people out there who think they might not even get that many in. So overall, things are looking up for gold here on the upside. First resistance about 1113. This one here is around 1122, and there's this big Fibonacci level here up around 1155. So it's definitely still some room for gold to continue to rebound. The third thing I wanted to talk about was expectations for earnings season. And really, the big question I've had on my mind this week about earnings season is, where are all the profit warnings? You would think, with the way stock markets have been getting crushed this week, this was the perfect week for anybody who wanted to sneak through negative news to do so. And really, we haven't had much in the way of confessions. We had a profit sales warning out of Macy's, and some choppy numbers out of U.S. retailers. But the only really big profit warning we had was from Chipotle Mexican Grill, and they've got internal problems. They've been having problems with E. coli and customers getting sick and things like that. So it's not a surprise to see them get hit, because they kind of, this is all more of an internal thing. It has less to do with the overall state of the economy. And so really, even though what we're starting to think, I'm starting to think is that expectations for this earnings season are starting to become pretty low. When we've seen this roll down, the PEs rolling down, and so on, that expectations are not that high going into the upcoming earnings season, which is actually encouraging, because that suggests room for upside surprises. Particularly since we've certainly had upside surprises this week, particularly on the U.S. employment. I mean, that almost 300,000 on U.S. payrolls was a lot higher than I was expecting. I was expecting a miss based on the Fed rate hike, but clearly the economy in some areas has been doing quite well. So we'll see if that translates into corporate earnings. The other thing is that could look up is if we do get a peak in the U.S. dollar and it starts to come back off a little bit, that also could take some of the pressure off of U.S. corporations that have been struggling with the foreign exchange impact of the higher dollar. So I'm going to point out just a few shares of interest. We kick off on Monday with Alcoa. And as we can see, Alcoa had sold off in the early part of 2015, and it's basically been going sideways. In the last couple of quarters, when I thought it would miss badly, it actually did reasonably well. So we'll see what happens here, but they do lead things off. We have on Thursday, we have Intel and JP Morgan Chase. I'm going to show both of these. We'll start here with Intel, and we'll see here, Intel is rolling over, and it's kind of in the middle. So if this is a 26 to 38 range, that's about $12. 32 is right in the middle of it. So if we did get a miss, we could get a downdraft in Intel here. A beat would help to support it. I would think it has come off a little bit, but there is still a risk in the case of Intel that it could come off further. I said I would look at JP Morgan next. Same sort of thing. We're kind of rolling back into the middle of a trading range here on JP Morgan, but if we did get a miss, then we could see it head lower from here. The a couple of others, I'll note Citigroup here as well. Now, if we look at Citigroup, they're trading down pretty much at their 52-week lows already. So expectations are already pretty low for Citi, and it's getting oversold. So it may not take much for to spark a bounce in that one. And the other one that's yeah, so those are some of the main ones that are reporting. Also, Wells Fargo reports. And then the following week, the week of the 18th, we really kick into earnings season, and then we'll really start to see what happens. Lots of action in stocks. People will also be looking at 2016 guidance as well as the quarter that's just ended. A couple of other stock charts I wanted to highlight while we're at it here. Let's take a look at Amazon. Amazon even seemed to have had a fairly strong holiday season. They were one of the few companies that was hiring in a big way. But look at this. Now that the holiday season has ended, even this stock has started to roll over, which does concern me that you could see a potential for a correction in Amazon. And really the other one, because I guess the question now for them is what do you do for an encore from here? And another company in that boat is Disney, with The Force Awakens having coming out and huge numbers at the box office. But interestingly enough, Disney's been falling since November, and in fact, even with these the last couple of weeks here with these big numbers, the stock has actually been heading down because people are going, "This is great, this is wonderful. Disney could blow the doors off on earnings this quarter, and then what?" And then so there's certainly an issue with them in terms of what are they going to do next to bring in the big box office. And if they don't have as many hits this year, then what happens, especially with their cable networks struggling. I'll also point out here the company that's been doing fairly well, but is Netflix had been doing well. And it's another one here. It looks like maybe that might be a double top there, and it's started to drift back off. So again, expectations are coming off, but even with a Netflix, with the huge run it's had in the past, a miss could be punished. So we've got to watch for that, because clearly traders are skittish here heading into the new year. People are worried about what 2016 is going to bring, and even though some of the expectations have eased back a little bit, that helps companies that miss because that beat the street because expectations are a little lower. But companies that missed could still be punished severely. Couple last charts I wanted to highlight here. One of the biggies, Apple, is pretty substantial. I'm actually going to blow this one up. Massive rally. Now look, left shoulder, right shoulder, neckline. We may have breaking the neckline of a head and shoulders top. To make things worse, the head was a quadruple top as well. So certainly Apple is one that's looking vulnerable here. At the same time, though, again, it's come off. So if they blow the doors off, this could be setting up for a rebound. So it does look like we're in for some potentially quite a bit of volatility. And I think that's the story coming into this week. Really, is that we're coming off a volatile week. We could be heading into another volatile week with a lot of markets moving, a lot of things getting extended, and so basically we could still see a very active week for trading that could potentially create a lot of opportunities.